Hi everyone, welcome back to another episode of Market Updates featuring by MarketsAll and Rationale. In today's video, I'll be basically covering what's going on in the market lately, what are the latest developments in the financial markets. Then I'll quickly skip through a few charts that I want to show to you. I mean, this video will be more chart based. And yeah, that's why I'll try to cut it as short as possible, the latest developments, as you know, to provide some more trade ideas through charts. So first of all, what's going on lately? First of all, as you might remember from the previous video, there was a Trump administration was administration was the main focus of attention in the market, and Scott Bessent was the highlight of it, as his nomination kind of slowed down the increase in yields, and last week we had covered this one, as he has more a balanced view on Trump's policies, because along the way of the election period, Trump was so bold on his all his thoughts and stuff. That's why a kind of a balancing hedging mindset is always helpful to decrease the volatility and stuff. But this week we started with an increasing USD. I'll show you a bit later in the charts. So what do I see in potential risks in the market for the upcoming period, let's say short and medium term? First of all, so volatility with Trump's start in the office in January 2025, I think it will bring some uncertainty, will bring some volatility, especially about his policies on so what's in his agenda. First of all, deregulation, second, tariffs, tax cuts and stuff. You know, which one will go first? That will be important, because each of those agendas has a different implication of different asset classes. And that's why that will bring some volatility, I believe. That will be the first potential risk that I see. Second, more a broader second risk is, it's a more broader evaluation, but potential trade war situation with China and stuff, especially after if he apply a huge tariffs and stuff. In such situation, as US companies doing business with foreign companies, considering those transaction will decline, we might see some forward decline in forward earning per share in some stocks, which might lead to sell-off in stock market. So that's one other risk that I see. Third risk that I see is as you all know, if the upcoming data indicates a hard landing, which means inflation is still there, kind of stagnant, or economic activity is deteriorating. If we see that kind of picture, that's another risk for sure. And that's also called if inflation and economic growth, inflation is high and economic growth is deteriorating, we can say stagflation might be there. But currently the base scenario is still soft landing, where we expect to see inflation heading to its Fed inflation target, plus economic activity is not disrupted. But lately, a third option is started to being discussed in the markets lately, which is a no lending scenario, where the inflation comes to Fed target rate without deteriorating the economic activity, economic growth. And this sounds good for especially stock market. I think it will help the risk on sentiment to be still on. And yeah, these are what I see generally, main 3 points that will be important, especially around US. When we come to the Eurozone, lately there's a France budget issue. As a result, we saw that the spread between French and German yields widened, and that's a risk of it. And I have a trade idea related to this France budget issue and Eurozone political tension. That's why I'll come more in details with while I'm showing that trade idea. And what do we expect like for this week? First of all, we received like Walder from Fed had a speech. His tone was positive for December rate cut. We received better than expected ISM. That means like a strong economy, no rush for rate cut. Then we received better than expected JOLTS number, and that means like higher than expected. Sorry, like not better. That means higher JOLT number indicates a weaker economy. So ISM and JOLTS kind of canceling out right now. We don't see that much like a major implication on the market. Plus, we received last week PCE inflation number, which is the main inflation indicator of Fed. That's still like showing that the downtrend in inflation is still intact. And we're going to receive on Friday this week non-farm payroll number, which will be decisive on pricings. In the October's reading, we saw that hurricanes and union strikes were impactful, and that was kind of expected though. And we'll see that the base effect will be gone, and we need to evaluate with that mentality. And I think after Trump's got elected, the economy the positive mentality is still there. That's why I don't expect to see a really a bad non-farm payroll number. And also we're going to receive Michigan consumer confidence index confidence data this week. Yeah, these will be data that we'll be watching. Now let me quickly switch to charts that I want to show you. Yeah, I think now you see first of all dollar index. As you can see, after Bessent nomination, we saw that this movement and this a positive bar, this black bar is this Monday, and we saw a rejection from here. As you might all recall, I'm following dollar index. I'm following dollar index as this symmetrical triangle, let's say symmetrical-ish triangle in the weekly time frame, and we saw that I've seen a breakout from here. Then it's pulled back. As you can see, rejection came from here. When I'm mentioning, generally my mentality is so diagonal lines, which symmetrical triangles, which consist of diagonal lines, are not that reliable according to my mentality compared to horizontal lines. So when I show you a symmetrical triangle, that doesn't mean that it that will definitely work out. And as you can see, this breakout has seen a rejection from previous high, which is pretty expected in any kind of symmetrical triangle. That's why, yeah, but for now at least, to see for example, as a short-term trader, if you want to trade like that, you could have traded here. That's why I had showed this symmetrical triangle. But yeah, I'll be watching at least the pivotal levels are accurate, and I'll be watching like this. Second of all, let's see this Bessent nomination impact on US 10-year yields as well. As you can remember, just until the let me come to daily chart. So where's the 4th of October? 4th of October. It's around here. Oh, sorry, my bad. 4th of sorry, yeah. So in the daily chart, you can see that with the rate cut expectations and stuff, we had seen this huge decline in from a 5% to 3.5% in US 10-year yields. But with the Trump's expectations, and after he got elected, the inflation expectation increased, and as a result of that, we saw that the US 10-year yields moved up until 4.5 levels. Then with Bessent nomination, as he has a balancing role, that volatility a bit calmed down, and we saw that a decline up until 4%, and currently it's trading around this red line is 200-day moving average. That will be crucial. Yeah, but US 10-year yields is, just as a reminder, is important, especially in terms of providing real rates. Real rates means like risk-free rates. As it increases, generally funds flow to like a yield, as there's no risk and it's a better opportunity. And when we see a decline, especially, we see some much more room for at least gold or like some other investment instruments. So EURGBP, I think this is the main highlight trade idea of this week for me. Actually, I had mentioned, I think, in the previous video, in the weekly chart, as you can see, there's a really nice rectangle chart pattern, and there's a potential breakdown here, which will be positive for pound and negative for euro for sure. And I had talked about like a potential, like a breakdown might be used as like a short opportunity, but I would like to talk about more in detail why I expect a bit more. I expect more like stronger GBP than euro. First of all, as I mentioned, like there's a France like a budget issue that widened the spread between Germany and France. On the UK side, post-Brexit outlook appears relatively strong, especially compared to the struggling Eurozone countries. The new UK Labour government has outlined 2025 budget priorities that avoid harsh income tax hikes and focus on like reducing unproductive public spending, such as like winter fuel subsidies for pensioners. So by encouraging investment in property and manufacturing, raising public sector rates, and addressing deficits strategically, the UK is positioned for robust nominal growth, likely keeping Bank of England rates high compared to global peers. So in such an environment, if the economic activity is good, why to rush cutting rates? On the other hand, when we come to Eurozone, France, first of all, face a challenging path with budgetary dysfunction and there's growth related tax policies. While Germany remains in economic stagnation, Germany's reluctance to finance critical domestic investment, coupled with collapse of its industrial model reliant on cheap energy and its declining competitiveness in the auto sector, and we saw the implication of Volkswagen's, Stellantis and stuff, that underscores the Eurozone struggle. Okay, both nations like France or like Germany seems a bit uncertain, and there's concerns about like a sustainable growth. That's why we might also face a sell-off in we might face maybe 50 basis surprise rate cut from Eurozone area. So in summary, what I'm trying to say is, seeing that much like robustness in UK economy, while on the other hand side Eurozone is struggling, I mean, shorting Euro GBP sounds like a great idea. And there's a weekly, when I come to the technical side, in the weekly, as you can see, there's a really nice rectangle chart pattern. I think it's totally worth to give it a shot. So yeah, Eurozone, I'm watching like this in the weekly charts. I think like there's not still it's not that, I mean, I want to see some more touches to like these like horizontal lines. And USD Danish krone, this is the weekly chart. A potential long opportunity might be provided here, like that might be a nice one. While speaking of Eurozone economic activity, let's check STOXX 600 in a daily chart. It's not formed yet, but if this price reaches up until here, that would lead to a formation of ascending triangle chart pattern after an uptrend. And in that scenario, I mean, here there's a failed breakout attempt, and this failed breakout, maybe I had mentioned, but if you look at it like this is a kind of head and shoulder continuation chart pattern, right? If you go like this, and this had failed, and then I will, yeah, USO is oil ETF in the weekly chart. That's how I'm following. Sorry. Yeah, there's a symmetrical triangle, and the price is tightening a lot. Like OPEC, I think, like increased their production also. Like apart from still maintaining my perspective on oil, that still I don't see any reason to be long as long as we don't see any like a geopolitical tension that will be impactful on supply side dynamics in oil. On the demand side, I don't see any like a definite like a long-term thing. And by the way, this kind of symmetrical triangle chart pattern might go like both directions, so you can utilize this like as a long opportunity if you see a breakout here with a short, and if it comes down, and if you can justify also like on the macro side, that might be a good short opportunity. I mean, I personally wouldn't prefer to be long. I mean basically like it's better to say like this: if the price comes up until here, and if it's prone to any like a breakout, then I will turn and look like what's going on. Maybe something I'm missing, maybe geopolitical tensions getting higher. But in that sense, I mean, if it comes to there, we need to look much more careful. But currently, with the current environment, yeah, short idea is much more supported by macro side. That's what I'm trying to say. And QQQ Nasdaq ETF. I'm following 3 ETF because it's like a nice basket and gives some insight. I'm following this parallel channel, and you might remember that there was a cup with handle breakout. It came here. Yeah, I mean, just like came a little bit below this support level, but still the uptrend is intact, and especially this like a black line 21-day moving averages like acting as a support here. And yeah, that's how I follow this one. And if we see more like a movement like this, we might expect to see some convergence to the short-term moving averages, but I think it's better like this, like a parallel channel is key to monitor this uptrend. And another like a trade idea, ARKG ETF, Genomic Revolution in ETF. There's a really nice look in the weekly chart at the bottom. This like pre-COVID period, as you might all recall, I don't know, ARKG ETF, Cathy Wood's ETF was really popular then. After like a rate hikes and stuff, like we did this, like you can see the performance here in the weekly chart, but in the like daily chart, as you can see, it offers a really nice rectangle chart pattern. And I will be warning if this price comes here, and if you follow like a Rationale or if you're subscribe to Rationale reports, you will be definitely informed, and you will be alerted in this kind of trade ideas. You can find the link of the both MarketsAll and Rationale website just below the video. And if you like whatever you see, we would be glad if you just like become a member for both. And yeah, apart from that, let me just touch to NVIDIA quickly. In like a Rationale equities report, I had given this as a symmetrical triangle chart pattern. It's a still ongoing trade idea, and the price target of symmetrical triangle chart pattern is here. But for the ones looking to get in, like still, if you want to buy, I think it's not a perfect one, but like as you can see, there's a base here is formed from like cup with handle-ish base. After seeing a rejection from here, it's moving and it's just the price is getting tight here, just below 21-day and moving average, and just above 50-day moving average. And when you see this price tightening, you should definitely go to check the volume dynamics. And as you can see, volume just got drying out. That's a good sign, because remember that we need to movement with high volume, and those high volumes are following low volumes. And in such situation, this is offering a low risk entry, I think, here. And if you just have a position around here, you might also still be in a potential breakout of this all-time high level. Yeah. Yeah, that's all I'm going to talk about this week. I hope you find it like insightful. And if you find whatever you see here is useful, please like a subscribe to MarketsAll YouTube channel. Please like a click the thumbs up button, and just don't hesitate to share with your friends and who's into trading. I hope you have a really good week, and have a good one. Bye.